Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
The Hang Seng trading with gains of around 0.6%.
The support zone, once again, doesn't change. It's 24,400, 24,330, 0.25% higher, 24,680.
If you look at the dollar chart of gold, it has been more volatile than equities.
According to a CNBC-TV18 poll, though, the RBI is expected to keep the repo rate unchanged at 5.5% in this policy.
If you really look at it, again, our share is 50% from cash and 50% derivative.
We are sure that we'll be able to retain our market share and grow as the market expands.
We have come off from those highs of 24,731. That continues to be a very important level that we are watching out for. Two-wheeler sales up 7% and medium and heavy commercial vehicle sales up 7% on a YY basis.
All four listings have given you one major takeaway, is the fact that a healthy IPO subscription may not necessarily translate into a healthy listing.
The Nifty in the green right now, but just at the flat mark. It's been very volatile and was something which was expected as well, considering it's the first Tuesday expiry ever.
Well, that is the day so far. Markets are quiet, very, very quiet. Something like actually yesterday, right? I mean, not being able to hold on to gains, 25 points lower, nothing very dramatic on the downside either. Broader markets are a little more negative. 1,800 stocks are lower, and you got about 1,200 stocks which are higher in trade. There's last 60 minutes coming up on closing bell. We are coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Surabhi and Nigel. Guys, hi. Good afternoon.
Hi, good afternoon.
Hi, afternoon, folks. I think markets are already off to the festive holiday. Looks like no one's interested. People are making their midweek, the Sarah break plans and 2nd October plans because, yeah, I mean, yesterday we had a lot of volatility within a 200-point range. Yeah. Today it's just been largely listless.
Well, that's right. And, the expiry factor will play out in the last 60 minutes.
That's where the excitement will happen.
And that's going to be, it could probably be the 8th straight session that the Nifty has ended lower. So let's see whether or not we can avoid that record. But I think in the last 25 to 30 years, we haven't seen 9 sessions in the red. So that's a record we'll want to maintain.
Well, talking about sort of cut-offs, right? Expiry today, it's also the end of the quarter.
Yeah.
So hopefully some of this selling is related to the quarter end kind of rebalancing, etc. Hopefully from, October perhaps is a little better. We'll see. But I just want to quickly highlight, 2 or 3 things. KPIT Tech, I'm not sure. Yeah. KPIT Tech is down 7%. Look at the intraday. And that is a plunge. 1240 it started. And just look at it, it's just one way. I'm sure, stocks don't sell off for no reason like that. We'll try and figure out what's happening. But there you go. It's a very sharp fall. Hitachi is the other one. Hitachi's taken a dive as well. Starting about 1 o'clock, it's down 6% on the day. Low was about 17,904 and it's come up about 150, 200 rupees from the low, but still down 6-odd%. So you've got a bunch of these names. Godfrey Phillips is another one. Which has taken a dive starting about 1240, 1245. And we'll sort of talk about more. As I said, market breadth is not all that great, with more down than up, second day in a row this week. Of course, market breadth has been poor last week as well. Just running you through what's coming up here over the next 60 minutes or so. So markets, of course, flat, volatile session, lots of single stock movers. And 650 around where the Nifty is now trading at. Banks are outperforming a little bit. RBI decision tomorrow, and we'll get you a preview. Editors take everything to prepare you what can happen tomorrow. Auto stocks are doing better. Release of monthly sales number for the month of September. We'll see if there is that GSE bump in those numbers. And a string of listings on Dalal Street this morning. Anand Rathi, of course, listed with a premium. Shashasai Technologies, minor listing gains, and Solar World seeing a listing pop of about 10%. But of course, very dramatically different outcomes now with a couple of hours in. So that's the overall picture and what we're going to address here over the next 60 minutes. Guys.
Absolutely. Just some more names as we bring in Mitesh as well. In terms of the downside, look at a name like Subros. Subros is down about 8.5%. So yeah, quite weak and undoing some gains that it saw yesterday. So broader markets pretty weak. Now, yeah, that's the one down at the day's low. So what should one be doing in this last 1 hour as expiry plays out? Let's bring in Mitesh. Mitesh, it's another down session at least so far. Now, what is your index advice, levels to track, and how are you expecting the expiry to play out?
Good afternoon, Surbhi. So, I maintain that rally should be used to selective markets, and till we get a strong move beyond 24,900, I don't think this is a market where I would be wanting to go positioning down. Having said that, I think the way the medium-term charts are shaping up, a good chance that we'll retest those 24,400, 350 zone again. The only scenario which could possibly play out on the other side is that we are oversold and the put call ratio is oversold as well. So you might get a 1 or 2 day kind of a pullback, but the idea is that if you're worried about the deep stop losses, then I think play with the options side. I think make some bear spreads, buy a higher strike put, sell a lower strike put. But the overall view is that we are likely to test the 24,450 zone in the coming 5 to 7 days. Having said that, on the stock side, I have one buy and one sell. Hindalco is a buy with a stop at 754 for targets of around 782. And Amber, that's Amber Limited, that's a sell with a stop at about, that's a sell with a stop at about 81.15 and a target of around 7,900 can be looked at.
Mitesh, just quickly on KPIT Tech, what Prashant was just spotting, actually, I mean, like he said, it's a very unusual decline. It's not a small stock. Any immediate levels that come to mind?
So, actually it's broken that big consolidation zone around the 1190 mark, and the fall has been much sharper. The lowest weekly closing we got sometime in April was around 1,086. So obviously that's not very far away. We might actually test that. And the lowest daily closing that time was around 1,035. I sense we might actually heading towards 1,035 in the next few weeks.
A few reasons that were doing the rounds was, Volkswagen, there was a case that was being heard, I think, an hour or so ago, and they lost that case. I don't know whether, that had some kind of impact. The second point that I heard was that the street is sniffing that quarter 2 will be rather weak. This is just, what the street has been a little bit nervous about. And thirdly is, it's the end of a quarter and end of the half year. Some kind of cleaning of the portfolios could be another reason where, someone is pressing that sell button out there. So I think a whole host of factors coming together. Sniffing weak results, maybe a couple of clients not looking up too much, and the end of a quarter, end of a half year could be some of the reasons it's putting, some pressure. And as it is, we know the stock is not cheap at all. So if there's not going to be earnings growth, then they're in a bit of an issue. We'll try to get more on that front, but that's clearly the one that's taken a hard knock. Last few minutes I was looking, even Tata Elxsi actually had slipped. That's down only 1.5%. But bulk of that move, has started at around that 1:30 p.m. or thereabouts. So Tata Elxsi as well comes up for you on the screen. But let's hop across to Hormuz. He's here to tell us about the primary market action. There were multiple listings today. Hormuz, give us some details. A lot of these got subscribed big time, but the listing gains are not to be seen.
Not the biggest takeaway of this, right? 4 listings today, and the biggest takeaway is indeed the fact that despite having healthy subscriptions, it is not necessary that it will translate into healthy listing gains as well. And barring Anand Rathi, which listed at around about a 4% premium and has built onto those gains since then, most of the other 3 listings that took place today, be it Jaro, be it Sheshasai Technologies, or be it Solar World, all of them have now slipped below their issue price. You take a look at their subscription figures as well, right? Anand Rathi was subscribed around 20 times, and as was the case with companies like Jaro was around 13 times. And for IPOs of their size, anywhere between 500 to 1,000 crore rupees, subscription figures of around 15 times to as high as 70 times are relatively healthy, especially considering the fact that all of these IPOs were open simultaneously for subscription, and yet they managed to get these figures. But you take a look at the listing as well. Jaro listed exactly at its IPO price and has now slumped further, and Sheshasai Tech, being the most subscribed among them, is now below its IPO price. Solar World as well, listed at the biggest premium among the 4, that too has slipped below its IPO price. So that being the biggest takeaway of these 4 listings today. Of course, market sentiment has a role to play in this as well, but the fact that despite having healthy IPO subscriptions, that has not translated into listing gains, at least for these companies. Early days still, but for those who play for the listings, this has not been a very good day.
Indeed, yeah. We don't have the kind of, super pops that the market has seen in the recent past. I think the one stock that bucks that trend is perhaps the Urban Company. In terms of the recent listings, that's the one which actually saw big ticket gains on day one. Let's discuss this and more with Dharmesh Kant, who's joining in from Chola Securities. Dharmesh, great to have you in. Today's 4 listings, I don't know if you had a look at any of these companies, all 4, 1, 2, 3, whatever. Any thoughts here? What would you advise people who did get allocation, who got allotment and are wondering now what to do?
Yeah, good afternoon, Survey. Thanks for having me. We did not come out with IPO note on any one of them. Of all the 4s we have avoided, and the last one which we came out was Atlanta Electricals, with a clear message that this is only for the listing gains. So no follow through expected. I think most of the IPOs which are coming is not only fairly priced but highly priced. It's on a premium side of the pricing which has been there, and the hope is still there in the system that there would be listing gains. So one has to be very, selective and sometimes lucky to have the listing gains play out. Let it cool down more. I mean, a couple of them are good, but the valuations are stretched as of now. So what we have been thinking that we'll wait for a couple of months, and all the new listings which have been there, once they arrive at a reasonable valuation, then pick and choose with a particular place can be there. But one needs to be careful, and there are many coming as well. So again, a warning sign is there.
Okay, all right. Hi, Dharmesh. Good afternoon. Good to see you in. Dharmesh, any kind of view on KPIT Technologies? The stock has fallen off the cliff. It's falling on very large volumes. The street is clearly sensing some bad news, unsure of whether or not it will play out that way. But your sense on this one?
Yeah, good afternoon, Nigel. Not that I have laid my hands on any news which is directly responsible for the fall in the stock price today. But all the 3 in the pack, be it KPIT Technology, Tata Elxsi or Tata Technologies, is showing some sort of a weakness in today's trading session. And my own sense was that going forward from Q2 onwards, things are likely to improve for this entire space because they are into engineering, research and development of automobiles primarily. The entire concept, design, modeling, powertrain and chassis engineering, design and development they do, and lot of new launches were aligned. Except India, most of the countries have settled with their tariff issues with the US, so things were likely to pick up, particularly for the big names like BMW, Merck and Volkswagen. So Tata Technology has sounded, pretty sound, the management about going forward, how the business is going to look better from Q2 onwards. So we have a coverage on that. We have been recommending buy. But to answer your specific question, why KPIT is falling today, that I don't know why this sharp correction is happening. However, for long-term perspective, I think Tata Technology offers a better chance of reaping good benefits as they have already bought a stake in Germany, which will give them access to a better margin and better volume growth. So numbers are likely to be better going forward into H2 of FY26 for Tata Technologies.
Got that. So that's interesting. Dharmesh, stay with us. I just want to quickly run our viewers through auto sales expectations, which we will, September sales will start pouring in from tomorrow morning. So let's bring in Sonal, who's here with a preview and what the street is expecting. Sonal, over to you.
Thank you for that. Well, it was a mixed demand scenario this time around, right? So the initial month had Shraddh period, and from 22nd of December, we saw that massive GST cut come by for all these auto companies. Now, this is something which led to pent-up demand across categories, and that is the reason companies had some positive commentary come by as well. For instance, Maruti says that they saw 75,000 units of retail sales since the start of Navratri. They continue to get 18,000 bookings per day and 80,000 inquiries across their distribution network. Hyundai said that they saw 11,000 dealer billings. Tata Motors said 10,000 deliveries and 25,000 inquiries on the first day of Navratri itself. Hero MotoCorp added, saying that they expect double-digit growth during this festive season itself. So Nomura has put out a note as far as the industry expectation is concerned, category-wise. They expect PV sales up 5% on a YY basis in the month of September, two-wheeler sales up 7% on a YY basis, and medium and heavy commercial vehicles up around 7% on a YY basis as well. Let's talk about individual companies now. For Ashok Leyland, the expectation is of a 6.8% growth in the month of September. For Bajaj Auto, while total sales will grow by 6.5%, the expectation is that it will be led by the export business, which will see a growth of around 12%, while domestic two-wheelers will see a growth of around 2%. For Eicher Motors, Royal Enfield will do well. Around 55% growth is expected there. VECV will see a single-digit growth at 5% this time around. Hero MotoCorp, they did say that they will see high double-digit growth, but Nomura expects the sales growth to be around 2% in the month of September. Maruti Suzuki, total sales expected to grow higher by 3%. M&M, where the total sales are expected to be higher by 7%. Their tractor business is expected to do well, 12.5% there. There has been some cuts across the agricultural value chain as well. They expect some growth to come by because of that. For Tata Motors, total sales expected to grow in double digits, 13% there. CV sales up 7%, but PVs will be the ones that will contribute to this growth by around 21.8%. Even TVS Motors expecting good double-digit growth this time. 14% is the estimate from Nomura. And for Hyundai, they're expecting 7.5% growth in their overall portfolio in the month of September.
Okay, so overall a good month expected, and many of these automakers perhaps expected to post double-digit growth. Thanks for that, Sonal. It preps us up as the numbers start trickling in tomorrow onwards. Dharmesh, the question is, now a lot of the stocks have already run, ahead of the event, as the market always functions. So the question is, how much is in the price? And which are the auto stocks that you can still buy, expecting sustained outperformance? What would your thoughts be and your preference be?
So I think almost 95 to 98% of it is in the price. And October may still be good as far as numbers are concerned, but November onwards, things may not be as rosy as it is looking at right now. So from tactical point of view, one should be, taking profits now. At least part profit taking is, recommended. And for structural overall, this theory to play out and the consumption to pick up, one has to wait. That answer will come only in the month of December when November numbers roll out. So for that, it's a long time to go. What we have been recommending to our investors who have been holding this automobile theory for, 2 years, 3 years kind of a perspective, they are, recommended to stay invested. But who were there for tactical trading purpose, so, it's time to take your profits out of the table. There will be volatility, some profit taking may happen. But again, I don't see much price movement for the entire month of October in most of these companies.
Okay, all right. Dharmesh, wanted your view on a couple of these defense names. DCX is a stock that yesterday you had a fund that sold, and then they won a small but strategic order from an Israel company. Any view on this name? A lot of promise over the years, but delivery has been short.
Yeah, Nigel, that's the issue with this company. If you look at the order book, they are sitting on a very strong order book. More than 2,600 crores of order book is still to be executed. And last year also the order book was strong, but last few quarters, the execution has not been happening. My understanding and discussion with the management did suggest that Q2, Q3 would be better than both on sequential basis, on a year-on-year basis, but not the kind of, quarters one can expect to justify the valuation multiples on which they are setting. However, they are sounding very positive on the execution of the order flow, but not in the near term. FY26 is likely to be a challenge for them. And the reason for that is normally it takes 6 to 7 months for the clearances to come from Ministry of Defense and all departments for the materials which are used for, manufacturing of PCBAs and master system integration and other stuff out there. And the first lot is already been done. This is the new set of orders which has come to the company in last 1 year, and those processes are in the place. So that's the reason why there's a delay in execution. So somebody who is holding this company, the recommendation is still stay invested. It may be a couple of more quarters where the pain is there, but eventually when the execution picks up, I think the stock prices should move up. Valuation wise, it's quite comfortable considering the order book and the size of cash they are sitting on balance sheet. More than 900 crores of cash is in the balance sheet to support the ongoing execution.
All right. One of those stocks I think you've been positive on. Let's see whether or not delivery does come about. Thanks a lot, Dharmesh, for joining in, giving us your view on a whole host of stocks. Have a good remainder of the day. Well, by the way, a few stocks actually are calling for attention, and the markets, maybe we don't get that 8 straight session in the red because the Nifty has perked up a little bit. Tata Motors is a stock that's moved up. Get the intraday chart out there. RBL Bank, for all of September, I've been saying that this is the stock that you need to keep on your radar. For half the series, it spends in the F&O band. And it just appears that the stock totally is in that band, out of the band. When it comes out as well, you don't see the stock falling much. And if you pull up RBL Bank with the Nifty Bank, pull up a 1-month chart, you'll see that the Nifty Bank has gone through periods of underperformance, but RBL Bank actually has done relatively better. So the street is sensing something, and that's why cash-based buying and big build-up in the open interest market is what we are seeing. We'll get RBL Bank as well as the Nifty Bank that comes up for you on the screen. That's the 1-month chart that I'm talking about. That's with the Nifty 50. With the Nifty Bank as well, we'll tell you a similar picture. Slip into a break, come back. Rahul Vera from Nippon India AIF will be waiting for us on the other side.
Welcome back. So, yep, it's volatile, but finally it's again flat, 5 points lower. That's where the Nifty is right now. So there you say, you saw that volatility in a very narrow band, and we are at the flat line, at least for now. Good time to then go across to Hormaz to find out what's buzzing, what's on his radar and on his board today. Hormaz.
Well, the index has been in such a mode, right? It's been absolutely snoozy, but what's not snoozing around are some of these broader market names, and IFGL Refractories, after being in snooze mode for almost a month, has now sprung up again. There's a 19% up move that you're seeing in today's session. We saw a similar move in one of those sessions last month as well, but today's volumes are on the highest on record for the stock. We've had close to 67 lakh shares, I beg your pardon, trade hands, and the 20-day average here is only 55,000 shares. Now, this has resulted in September becoming the best month for the stock since May of this year, and the stock is up 30% so far on a year-to-date basis. What has snapped an 8-day losing streak today is Chemfab Alkalis, and after 8 days of losses, the stock has gained almost 16% today, and this 16% move was enough to recover the entire loss that it saw in the last 8 trading sessions. Now, today's gain is the biggest single day up move we have seen since the month of January, and today's volumes are also the highest that the stock has seen since December of 2024. We have had close to 2 lakh shares change hands, and take a look at the 20-day average, only 4,000 shares being the 20-day average here. Stock has been an underperformer this year, down 34%, but had almost tripled in value in 2024. Tamil Nadu Newsprint is the other one. That too has snapped a 3-day losing streak today. The biggest single-day gain since December of last year. And this stock too, before today's session, the last 9 sessions preceding this one, the stock had gained only once in those 9 sessions. And today's trade, we have had 90 lakh shares that have changed hands, and the 20-day average is 90,000 shares for Tamil Nadu Newsprint. The stock is back above, and it had broken above its 100-day moving average of 162. That's an important level to watch out for. And the stock has been an underperformer so far, down 12% year to date, and had declined close to 40% last year as well. And a stock that has made headlines in the last 1 hour or so, KPIT Technologies, is now down over 9%, the biggest single day fall since October of 24. The stock had declined around 14% back then, and it's not today itself. The stock has been on a downtrend in 7 out of the last 8 trading sessions now. It's down around 15-16% during this period, as a result of which the stock has now turned negative for the month of September. The volumes have seen a very sharp spike after 1:30 p.m. is when the stock started to fall as well, where 23 lakh shares trading so far, a 20-day average of 7 lakh shares, and the stock has not had a very good year. The 9 months of 2025 so far, the stock has had positive returns only in 2 of those months, which is March and May, and the stock is down 24% so far, most of which has come in the month of September, and it has also made it the worst year that the stock has had since its listing in 2019. That's KPIT Tech for you today.
All right. Thanks very much, Hormuz, for that. It's a big drop, 10% now. Actually, it was down a little lesser when we started at 230, but the cuts only become a little deeper. Rahul Veera is with us, Fund Manager, Equity Investments at Nippon India AIF. Rahul, good to have you with us here. Thanks for joining us. I think earnings will keep markets busy, starting shortly. In the next 6-7 days, it'll start and go on for a month. Where are you most focused on the back of earnings? Where do you think, on the back of earnings, etc., you'd get opportunities, both on the long and short side?
So largely, we are focused on consumption theme as of now. So if we take the total wage bill, right, for listed companies is close to 16 lakh crore. Now, if you take central government wage bill, again, it's closer to 7 lakh crore, and again 14 lakh crore on the state government side. The total cumulative wage bills, right, for India's economy is closer to 40 lakh crore. Now, given that the 8th pay commission is going to infuse close to 3.5 lakh crore over a period of time, so almost a 10% increase that we are going to see as a booster for the consumption theme. Within the consumption, more of autos and consumer discretionary that we are focusing on. Like we discussed last time, some of the platform names that we are closely watching. Some of the themes that we are other than that is focusing on names like housing finance companies. Some of them that we like is fintech companies. So again, a little bit of platform, consumption and auto is where the focus is on.
Consumption and auto. Rahul, hi. So good to have you on the show. Just to understand on consumption, and you mentioned platform companies, they've had a decent run actually. They've turned around from the lows, have had a decent run today. I mean, for instance, we got a call of 400 rupees on internal by one of the brokers. So what's your thesis here? I mean, is it quick commerce? Is it going to be food delivery? Are you looking at, say, travel aggregators? Because now, I mean, you have something like an urban company, home services. So there's a wide variety of such platform companies that are coming into the listed fold. What approach are you taking in terms of your investments here?
Right. See, each sub-segment is going to be a little bit different from each other. But from a longer tenure, right, from a 10-year perspective, you see how things are going to penetration levels are for the food delivery companies or for that matter, quick commerce. We believe this is going to be the mainstay eventually in the long run. Average order value has been flattish. Number of orders is peaking out, but it's a quick commerce and the adjacencies for some platforms that they're able to create going forward. So focus remains like how much more adjacencies they can create. We've seen historically like some other companies, right, from even though they were not tech oriented, but the adjacencies that they were able to create over a 10-year period with the help of course, funding was huge. The kind of wealth creation happened during those days also was very large. If we take the case of Walmart between 1984 to 2004, right, 25% compounding stock. The kind of grocer, then they moved into different items. That's the way these companies will keep on growing. So we believe platforms will be a key thesis to play out over the next 10-year period.
Hi, Rahul. Good afternoon. Good to see you. When this government was totally focused on capital expenditure. For the first few years, I think we saw the capex spend move from what, 1.5 lakh to around 2 lakh crore, all the way to 10, 11 lakh crore. Now, in the last 8 or 9 months or so, we've clearly seen that shift from capex. They've said we have done the heavy lifting for so long. Now we want to see the private sector do that capex lift, and the shift has been towards consumption. Whether it's the tax cuts, whether it's the GST 2.0 or so, clearly the capex to consumption theme seems to be playing out. Are you realigning your portfolio out there? Because I'm looking at a lot of mutual funds. They are going in, then they're selling a lot of industrials, a lot of these capex themes or thereabouts. Are you doing the same?
Yes, we largely agree. So if you see the 11 lakh crore outlay in the budget that was given out, right? Only one of the themes that show very large outlay was power, which showed 12% growth on a YY basis in terms of the budget outlays. Otherwise, your other rails or your road was showing flattish outlays. So very clear, other than power and maybe a little bit of defense post-budget, we believe the allocation towards capex has more or less peaked out. Even from a state level capex, right, 14 lakh, 15 lakh crore that the state governments have been doing. If you see the budgets of most of the states are largely strained at this point of time. Almost out of 15 large states, 10 states are started hitting the peak of 3.5% of FRBM Act fiscal deficit limits. So we believe incremental allocation towards capex even by states or center is going to be difficult from here. So portfolio pivot is going to be important at this point of time.
Pipe makers as well, Rahul, is you like those?
I'm sorry?
Pipe makers. You have some in your portfolio?
Yeah, we love the PVC pipes. We believe they're at the bottom of the cycle. Post the AD anti-dumping duty coming in, we believe the prices started moving up. The average PVC 10-year has been 72, right? It hit with the Chinese dumping, it went down to 66. Now it has started recovering. Though the volume, again, being a subsidiary of a little bit of capex plus a little bit of agri side plus real estate, we'll have to see how the volumes pick up, but it's an interesting space to look out for.
Okay, sorry, jumping sectors, but microfinance, do you have any exposure?
No, we do not have any exposure. We believe it's going to be on a reversal now. Largely, worst is behind. 1 or 2 quarters from here on, we'll have to keep an eye on them.
Look at the flash at the bottom of the screen. Adar Poonawala, among others, in freight by RCB. So that is very, very interesting. RCB owners are seeking a $2 billion valuation for the franchise. And it's quite something. So, big industry name in the fray, among others, to buy the RCB franchise.
United Spirits could be the stock that,
we should actually tag United Spirits in those flashes and look at what's happening there. A bit of a bump starting to emerge straight away on the back of the news coming through. 13:07 or so. I think Mangalam is going to have more details and he should be with us shortly to run us through what this is going to look like. But, the IPL and, all these teams which are there, absolute, the business model is extremely interesting. and there's not very many transactions which take place. It's not as if, you know, there are investors, but they are all mostly strategic, long-term in nature. It's not as if, you know, stakes are sold and bought on a regular basis. So few transactions, but we've seen a few marquee transactions in the past as well. One of the most profitable sporting leagues in the world now.
Yeah, you know, and for RCB, basically, they just won the, the last tournament that took place. We'll have to see how things pan out on that front. Currently, the market capitalization of United Spirits is around 95,000 crores. So they're going to get $2 billion thereabouts. That's going to be quite large. That'll be roughly around 17,000 crores approximately. Current market capitalization is around 96,000 crores. And what you get with RCB, I think, is an entire controlling stake. There's, they own the entire franchise. Otherwise, you could get piecemeal with regard to the others. So we'll have to see what they're interested in, whether they want to buy the entire stake and or will they want to come in as a strategic investor. Mangalam, I think, is the one you're saying who is...
Mangalam is going to come back. By the way, the last transaction just is Torrent Group buying 67% of Gujarat Titans. That was, they bought 67% at 575 for 575. So basically, they bought at a $900 million valuation.
Yeah, close to $1 billion.
Close to, yeah. So $900 million, and the CVC retained their 33% stake in Gujarat Titans. That's the other large transaction which had happened.
Yeah, and the other one I'll keep an eye out on, Prashant, is for United Spirits, the company, the market cap is close to around 1 lakh crores, so $2 billion. But Sun TV could be the other one, right? Because they as well own the franchise in there, and that's under the listed entity. And, for a smaller company, actually, if there is a monetization of another company that takes place at $2 billion, suddenly things look very, very large for this. Because if I got the number right, Sun TV will be around 25,000 crores of market cap. They have cash in the books. And if they have this IPL franchise as well, which could be valued at a discount in comparison to RCB, but even $1 billion thereabouts, suddenly that gives them their additional fillip. Though the core business hasn't been growing that much, but you have this cash in books, you suddenly have an IPL franchise.
But the point there is the seller has to, I mean, the point is that the willingness to kind of sort of, sell. I think Nimesh is also with us and on chat. He's been listening in, and I think he wants to add in. Avid cricket watcher for starters, but also he's been following some of these teams. Nimesh.
Of course, Prashant. So, from a market perspective, as even Nigel pointed out, there are only 2.5 teams through which you can play the IPL team, right? RCB is 100% owned by United Spirits. There is, Sunrisers Hyderabad owned by Sun TV, fully owned by Sun TV. And RPGS Ventures owns 50% of Lucknow team. So, in that sense, there are only 2.5 listed players to play the IPL teams. Now, if the valuation of $2 billion is rightly so, and if that sense the benchmark, I guess, of course, United Spirits do benefit, but the bigger beneficiary would be Sun TV. As Nigel was pointing out, 25,000 crore market cap, $2 billion of valuation coming in from the IPL team. They're sitting on 6,000 crores of cash as well. So technically, if you add IPL team and the cash, then you're getting the rest of the residual business virtually for free. So I guess from that perspective, Sun TV could be the biggest beneficiary, and that's something we've discussed in the past as well, that these are the 2 or 3 players whom investors can play through if they want to play the IPL game and the valuation for the franchises. So just wanted to add that perspective on if $2 billion is indeed what RCB fetches, then I guess there will be a rub-off on these 2 other companies as well, Sun TV as well as RPGS Ventures.
So this 2 billion figure, where else have we heard it before? Yesterday, I believe, I think it was yesterday, Mr. Lalit Modi had put out a social media tweet. And he was talking about how RCB is a good franchise and he wouldn't be surprised if some top dollar global funds perhaps want to come in and have a piece of the pie. And in an interview to, I think, Michael Clark, it was a conversation or a podcast, that's where he said that it would be unwise of the current promoters to sell for anything less than 2 billion. And I think that's what the buzz is right now, that it's going to be around that vicinity, the number, when it eventually becomes formal. So let's see. But it definitely has the market excited.
Actually, I'd done a show on Prime on IPL, the business of IPL. And so I have some of the graphics numbers, etc. I don't know if they can pull it up. But RCB is in terms of brand rankings, franchise brand rankings, it's number 1. It's $269 million. This was their estimate, which is just the value of the brand.
This is as per a global report, I think. This 269 million valuation.
Correct.
Yeah.
It's not the full value of the team. It's just the value of the brand. Yeah,
the
269.
brand. Correct.
Mumbai Indians was number 2, 242. CSK was number 3 at about $235 million, and so on and so forth. Yeah. That's I think Mangalam is going to come up and maybe talk more about this. But why not use the opportunity to just talk about, I don't know if Rahul has any thoughts. Rahul, if you're still with us, any thoughts at all? Slightly out of syllabus.
Yeah. So we did evaluate some of these names, right? When you do the SOTP for some of these names from the listed companies, and we see the valuation and value unlocking that is happening, as you rightly mentioned. The last deal that was done was closer to $900 million. At $2 billion, we see some kind of an upside there. But more or less, it's going to be the core business that's going to add value over the medium term. So yeah, $2 billion of cash is a big number for some of these companies. But re-rating for some of these names is going to be challenging. Only the number 1, number 2 team will get that valuation eventually.
So you evaluated these USL and Sun TV, etc. Those names?
Yeah.
Okay, and
we do SOTP, as Nimesh mentioned a few names there.
Yeah.
Right. So we evaluated on a SOTP basis core business plus the IPL brand overall. What will the team valuation be?
So attractive, not attractive. Makes sense or no?
No, it's going to be challenging for the low-run teams.
Okay.
Yeah. Number 1 and 2, the valuations will matter. They will get eventually the valuation that we are talking about on screen right now. But the lower rung eventually will not get the valuation that we eventually be pegging it.
Yeah. Yeah, that's the other one actually. So we have United Spirits, we have Sun TV, and the one that Nimesh pointed out, RPSG Ventures. And the reason is RPSG Ventures has 51% stake in LSG, Lucknow, and the market capitalization itself of RPSG Ventures is only around 2,730 crores, and they have 51% stake in one of those IPL teams. So, that could be the other one where I think they have a football team as well, if I remember correctly, with regard to other ones as well. So that could be the other one that Nimesh pointed out. 3 companies from the listed space that you'll want to keep a close eye on with regard to this IPL play.
Absolutely. Keeping in mind, obviously, that they're all 3 different franchises, different identities, different brands, but it gives us some sort of a benchmark and excitement for sure. Thanks very much, Rahul, for weighing in and taking our questions today. Very quickly, before we get Mangalam to talk more about this exciting piece of news around RCB, Nimesh Chatter, what's on the radar today? What have you picked up? Quiet session otherwise.
Oh, absolutely quiet. Except for this IPL news, it was a dull day for me as well. I'm also struggling for news. I'm also struggling for charter, so to speak. There is zero lack of conviction, not much of interest as well from retail or from HNI investors. It's been a struggling market, so to speak, and there is really no traction as well. Barring the PSU basket, which has relatively outperformed in the last month or so, there is not much traction across many of the sectors. You look at IT, pharma, all export sectors are under pressure, and for domestic sectors, it's going to be a challenging Q2. So no fresh triggers for that as well. Again, from a liquidity point of view, I guess even Rahul can speak about it if he's still there. Most of the domestic funds are also struggling with liquidity because of the slew of IPOs which are coming there, and that's actually sucking a lot of domestic liquidity. So clearly, it's been that kind of a market where one day you might see a bit of a pop, but on a consistent basis, it's been difficult to make money for HNIs, for retail investors, or for that matter, institutional investors as well. So on an expiry day to have such a range-bound market, that explains the kind of interest which is there in the market, at least at this point in time.
Okay, all right. Now, you have managed to pick out a few names, although it's been a struggle, Nimesh. What are those names?
Well, so the first name on my list is Sensex Pharma. It's been consolidating in a narrow range, but I understand one very large influential investor has been accumulating this stock in the last couple of days. Remember, the management has gone on record that Q2 and Q3 is going to be very strong for the company. So watch out for the numbers in Q2. The second stock is Vedanta. Again, buzzing in trade today, up to 2.5%. For Vedanta, I guess the next big trigger would be the October 9th hearing. But again, that's the trigger which is keeping the street excited. And the street is anticipating that maybe, if not in the next hearing, but in the consequent hearings, you will see the demerger approval coming through. So that's the trigger as far as Vedanta, and some bit of interest is back. The third stock is MTAR Technologies. Again, in a narrow range for the last couple of weeks, but for MTAR, there is indication that you could see a large block coming soon in MTAR Technologies. And the last one is RBL Bank. In the band through a large part of the series, you've seen a bit of a reaction today in the last 30 minutes of trade. Looks like there is a bit of delivery-based buying. And for RBL Bank, I think the next one could be quite interesting because post Q2 by Sensex, you will see that fundraising as well. Remember, on 26th there was a AGM, and the shareholders have approved the fundraising. So the city is anticipating a big fundraising, maybe post the Q2 earnings.
Okay, all right. Thank you for that, Nimesh, for all the chatter and all the buzz. But just to quickly go back to that story, which finally caused some flutter in the market, the prospects of United Spirits looking at monetizing their IPL franchise, Royal Challengers Bangalore. Manglam's joining in. Manglam, and finally they waited for what? How many was it? 17 years, 16 years before finally getting the title this time. Maybe a good time finally?
Well, they got the championship after 18 years, but the murmurs of their stake sale has been around for a while right now. And now what we understand is that there are interested players have put their hat in the ring as well. And what we understand from our sources is that one of the players could perhaps be Siram's other Poonawalla as well. So what we understand is that Diageo has put RCB up for sale, and Siram's other Poonawalla has emerged as the front runner. Other Poonawalla, among the others, is keen to buy the entire stake and not just a part stake sale in RCB. And the owners are seeking close to $2 billion in terms of valuation. And here's where it is very important to understand a couple of things. From a seller standpoint, there's no better time than this to sell because they've just won the championship. And at the same time, you have their star player who's towards the latter half of his career, if not, towards the end of his career itself. So we have Virat Kohli as well. So you cash in on the chips when they're all on the table. That's what, what would make sense from the seller standpoint. But from a buyer standpoint, RCB is one of the most exciting sports franchises that we have, not only in the IPL, but if you look at some of the metrics, online engagement metrics and the fan loyalty metrics, they are actually among the biggest sport franchises in the world itself. And with the growing sport economy that India is, it would make sense for one to put in the money. The only difference here is that instead of getting it from the BCCI's auction, where the payment is staggered over 10 years, if you're buying it fully, then you have to pay the entire money upfront. So to that extent, the ROI metrics or the payback period metrics get a little skewed, which is where the discussions are currently underway. And that's what we understand from the players who we are talking to. Citi, obviously, are the appointed bankers for this transaction. We formally reached out to Adar Poonawalla. He refuses to comment on the story. Diageo have said that this is market speculation, so they don't want to comment on that. But we did have Praveen Someshwar, who's the MD and CEO of United Spirits, on record speaking to us, saying that RCB is a very exciting business, but he qualified it by saying it's non-core to their alcohol business. So those are a couple of things that we'll most definitely monitor. RCB owners seeking a valuation close to $2 billion. Buyers will have to put all the money up front. Will that happen or not is something we'll watch out for. From an RCB standpoint, from a United States share standpoint, it accounts for nearly 15% of their sum of the parts valuation that brokerages are assigning. So that's why we are seeing some bit of excitement in the stock. Let's see what happens, but let's also hear out what Praveen Someshwar had to say to CNBC-TV18.
It's an exciting asset. It's clearly something which is absolutely exciting because cricket is the lifeline of the country. And within cricket, IPL has a play. And therefore, it's an exciting asset. But that has nothing to do with our core Alcobev business. Well, I wouldn't get to saying unlocking or unlocking. It's certainly not core. There's no doubt about it. Alcobev is our core, and that's where we focus on our business, and that's exciting. This is an exciting extension.
Okay, so the big story of the afternoon indeed. We do have to take a very quick break on that note. Come back on the other side. We'll, of course, get you the final trades for the day. Quick check on what's happening in the F&O markets as well. So stay tuned for that. Welcome back. Again, about 30 points lower. There's been that kind of an expiry. So from being flat, the market is pretty much back to where we started when the show began at 2:30. Mitesh is with us. Mitesh, final advice for the day.
I have one STBT call, Anjali. Keep a stop at about 580 half, put target of 565. On the buying side, there are the metal name that's NMDC. Keep a stop at 75, 70 for targets for about 7, 8.
We'll take a break. Mitesh, thank you very much. Just completely short on time, so I have to take another quick commercial break, mandatory one. But Jay Bala is with us on the other side. Stay tuned. Welcome back. Just 4 minutes to go for close. Jay Bala is with us. Jay, good to have you with us here. Thanks very much for joining us. Are we likely to see a slightly more excitable move? Because a few days now it's been sideways, and this week so far, yesterday and today, not very much at all. Quiet. What's your sense?
Hi, Prashant. See, the markets are at a very important critical support zone, 24,440 to 24,337. That's absolutely crucial. If the markets were to break, the market can dip sharply and something like 1,000-point dip, and it can delay the bull market by about a quarter, 2 months to a quarter. But this doesn't impact the medium-term picture, where when you say medium-term picture, it's unlikely to break the April low, and we are likely to see 29,000 later on in 2026. But that being the case, the short term could get impacted, and we could have a Q4 delay for the bull market's resumption. And the US markets are also very close to an important top. So, and again, US markets are likely to resume their bull trend in 2026. This is likely to be a correction within the bull trend.
Okay, Jay, so on the downside, what is the level you're looking at? Which is the line in the sand?
Basically, the line in the sand is the April low, but the dip is likely to be somewhere close to about 23,400 to 23,600. That's the higher low I'm anticipating if 24,440, 24,337 were to break. But that's an important if, but it's very close to. The bulls have squandered their advantage that they had, and they come below 24,750, which is not an ideal situation for a very strong bullish case.
All right, 24,440, 24,475 is the first level we should be looking at the downside. But next year, our date with 29,000 is on. So we'll have to keep an eye out on that mark. I'll tell you, the kind of mood that we're seeing in the market, 26,000 also will do, at least for the time being. That aside, what about individual stocks? Give us a couple of ideas first.
Yeah, I have a pick from the metal space, and Nalco with a stop loss of 197 with an objective of 250. And I also like TVS Motors, but in both these cases, you need to be scaling down your position sizing because we are at an important support zone, and I don't know if these two stocks can buck the trend. So scale down, and TVS Motors is more a half a pick, but coming from a strong sector, and Nalco again scale down position with a stop loss of 197.
Just Tata Investment Corp, right? It's a 10,000 rupee stock.
And it's up 20%.
No, it's up 20%. And 10,000 rupee stock, it's the #1 volume-led gainer.
Yeah.
It's got the highest amount of volumes right now. By far. I mean, I think, some 10x the next stock, which is Nalco, by the way, with a 4%, 5% pop. So I'm not sure if there's something specific happening, or maybe there is a large block. But these are very, very large.
I was thinking about this, Prashant.
Actually, Surabhi, volumes today, I suspect, are the highest ever on Tata Investment Corp.
So we know that it holds a little over 2% in Tata Capital.
Yes.
But that's been a wide-known fact. I mean, nothing new about it as of now. And we also know that Tata Capital itself, from valuations of about 1,100 crores in the unlisted market at one point in time, finally, when the issue is coming to the public markets, I think 325, 326, I think, is the upper end of the price band. But I'm not sure whether it's linked to that listing or something completely different.
It's like a
mutual fund.
It's like a mutual fund.
Yeah.
It owns